Today's topic: primary and secondary market in stock market. The primary and secondary markets are two distinct segments of the stock market, each serving different purposes in the buying and selling of securities. Primary market definition: the primary market, also known as the new issue market, is where new securities are initially issued and sold to the public for the first time. This is done through an initial public offering (IPO) or additional issuance of securities by companies participants. In the primary market, the primary participants are the issuing company and investment banks or underwriters, who facilitate the issuance process. Purpose: companies raise capital by issuing new shares, bonds, or other financial instruments. This capital is used for various purposes, such as expansion, research and development, debt repayment, etc. Transactions: securities in the primary market are sold directly from the issuing company to investors. The company receives the funds generated from the sale of securities. Secondary market definition: the secondary market, also known as the stock market or aftermarket, is where existing securities are bought and sold among investors. It involves the trading of securities that have already been issued in the primary market. Participants: in the secondary market, the primary participants are individual and institutional investors, such as stockbrokers, investment banks, and other financial institutions. Purpose: the secondary market provides a platform for investors to buy and sell previously issued securities without the involvement of the issuing company. It provides liquidity to investors and allows them to exit or enter positions in the market. Transactions: securities in the secondary market are traded on stock exchanges or over-the-counter (OTC) platforms. The prices are determined by market forces, supply and demand, and the buying and selling occur between investors. In summary, the primary market is where securities are initially issued, and the funds go directly to the issuing company. The secondary market is where existing securities are traded among investors, providing liquidity and a platform for buying and selling after the initial issuance in the primary market. Please follow my website profittradehunt.blogspot.com for latest stock market news and more. Thank you for watching. Please like, share, and subscribe for more interesting information.